Hello, and welcome to the Freddie Mac Connect session, Real Estate Professionals' Influence on Mortgage. All lines are in listen-only mode. This presentation is being recorded and will be made available following the session. If you have any questions for our speaker, please enter them using the Q&A box at the bottom of your screen. If you have any technical issues, please also use the Q&A box and someone will assist you. Lastly, using the handouts icon, you will find links to our speaker's bio, resources, and the presentation deck. With that, I will turn it over to Carmen Mercado, Director of Affordable Lending for Single Family Mission and Community Engagement. Carmen, the floor is yours.
Thank you so much for that introduction. As they said, I'm Carmen Mercado. I'm really looking forward to sharing valuable information about some of the insights that we have on real estate professionals and their influence and impact in the process. We have a really big agenda, so we're going to get to it. First, we're going to cover the value of the real estate professional and our Freddie Mac approach in reaching out to this particular community. Secondly, we're going to talk a little bit about research and insights that we recently unveiled, and we're going to share that with you based on the views and the responses of real estate professionals. And lastly, we're going to cover resources that you can use to grow your business. So with that, the first part of it was really talking to you about what Freddie Mac is doing to reach out to the real estate professional community. We do this through education. We understand that if we can empower the real estate professional to have a broader knowledge of understanding of our products, resources, and tools, that's going to help them help more customers and clients achieve home ownership. We really want to strengthen the partnerships that they have at a local level, not only with our loan originators, our lending partners, our housing counseling agencies, as well as our trade organizations. We understand that if they have a robust network of industry professionals that can help them serve their community, they're going to be able to leverage the products and low down payment options available for their consumers. What is our approach? We have worked with trade associations, real estate companies, as well as housing counseling agencies, nationally at a state level, as well as locally. We have launched a CE course that's available in 15 markets, all about affordable lending to help broaden the real estate professionals' knowledge base about purchasing and working with home buyers that are purchasing and in the need of low down payment options. We're leveraging our partnerships with the housing agencies and the borrower help centers as well. Some of the things that we have done, we have worked with our local courses in 15 markets on CE credits, where we have been able to work with a local lender who is really that subject matter expert. So we provide CE courses to the real estate professionals, and 53% of the time, we have been able to include a local originator so that they can have a local access to someone who knows the information, knows the business to help their clients. We also have collaborated with trade associations, and 46% of the time have been able to include a local loan originator. And with our CE courses, we 80% of the time, as well as our housing finance agencies, have been part of our educational courses to this particular real estate community. We're very excited that we also launched with our marketing and communications team a resource page where they can access training, in-depth training on different products. And we have successfully trained over 869 real estate professionals through this one focus area alone. We have talked about housing finance agencies, choice renovations, our Home Possible, Home One, and other products. And we're very proud to see the results because this was a new launch for this year, and you too can access this information. And towards the end, I'll tell you where. When we look at the insights, we did a survey and we reached out to real estate professionals and wanted to really understand what influence did they have in the mortgage process when working with their buyers. So I wanted to start, did they have a lender network referral base? And if so, what did they look like and what could we learn? So today we're going to share that information with you. The vast majority of the real estate professionals that responded said that they have anywhere between 2 to 3 lending partners that are part of their real estate network because they understand that they want to work with lenders that are going to be able to help their buyers through that transaction. When we asked them, how did they include these lender networks into their referral network? You can see the vast majority was word of mouth. This is individuals maybe that work with other real estate partners within their office or in other companies, and that they had a good experience. When you took the buyer selection, these are the buyers telling them this is a lender that they would like to work with. And when you look at past transactions, was also extremely important to them. But the really key takeaway here is that 86% did have a lender referral network. So they are looking to you to help them close the business. And anywhere between 2 to 3%, 2 to 3 individuals that are part of their network, and 4 to 6 at 27%. When we look at what do you look at in terms of determining whether or not you're going to add a lender to your lender referral network, you're going to see that they reassess this list anywhere between 6 months to a year. So for those loan originators who may think that their realtors in their communities already have established relationships, rethink that, because they are reassessing on a regular basis. They have made changes. 83% of them that do have a lender referral network are making changes to their list. Those that indeed have said, yes, I have added additional lenders, that was at 69%. So again, this is a fluid list and a great opportunity for you to engage with real estate professionals. When we were asking them what was important for them in order for them to select and choose to work with that lender referral list, ease of doing business, transparent communication, and frequent communication, not only with the client, but with them. So really important as loan originators and real estate professionals work together. Those are the top 3 things that are really important to them. You can see other options such as mortgage options, the speed to close the business, but the most important thing is ease of communication, transparent communication, as well as ease of doing business. When we also asked them, was product knowledge an important factor when you were selecting the lenders to put on your recommendation list? Actually, 80% said yes, product knowledge was the most important thing, even above years of experience. Local presence was the third. So for loan originators who may be newer in the business, if you learn your products, you have a really good percentage of opportunity here to be added to those networks despite your years of experience. Preparation, knowledge, and sharing that information is key for the real estate community. We also wanted to ask them what were other factors in terms of working with their clients, and how many recommendations did they make to their clients, and did their clients actually take them up on that recommendation? As you can see, 76% said that their customer or client did actually go with the lender that they referred them or recommended. They usually give 2 to 3 recommendations. For those customers or clients that did not go with any of the recommendations, primarily is because they already had an existing relationship with a bank or the lending institution, or that they received word of mouth, family and friends recommendations. But again, 76%, that is a significant impact and very similar to a survey that we did in 2020. So it's been pretty steady all these years. When we asked them about how strong did they feel about their knowledge base when it came to down payment resources, homeownership education programs, or even working with state and housing finance agencies, you can see there's a great opportunity here. 46% were familiar, 41% were familiar with homeownership education courses, and only 37% with state and housing finance agencies. I see this as an opportunity for us to continue to do what we're doing in the real estate space, really focusing on education around these products and resources for the realtor community. When we looked at how comfortable did they feel of being that trusted advisor for their buyers, there were key areas that stood out. 88% felt very comfortable and confident in their ability and knowledge of their local area. Real estate is local. 86% really said that showing buyers that houses that met their needs was also within their comfort level. 86% said the navigating the home process. No surprises here. This is what they do every single day, and they're good at it. When we also asked them about how comfortable did they feel in terms of the firms and their knowledge base as it pertains to down payment resources, homeownership education, and state and housing finance agencies, as well as others, as you see on the screen. As you can see, some interesting facts here is that the national firms were a little lower than their regional and independent counterparts, which means that there's a really good opportunity here for us to continue to educate real estate professionals that are affiliated with national organizations, which we do. We have partnered with them over the years, and we have seen an increase in terms of engagement as well as knowledge base, but there is still work to be done. Regional and independent seem to have a stronger presence in terms of knowledge base on down payment courses and how to work with state and housing finance agencies. We wanted to also shift a little bit the conversation and go into product knowledge and variability. What do they know, or how do they see themselves in terms of the lending process? Do they see themselves as experts or do they not? No surprise here that 78% of them felt that buyers really relied on them to understand the loan officers and lenders. 78% said yes. Referral, they were very strong at. They felt comfortable referring to their lender network. When you ask them about education in the mortgage process, that dropped to about 58% for those with the lender network, even lower for those real estate professionals that don't have a lender network. No surprise here, because really they are really strong at what they do best. Recommending the best loan options, that also dropped because they leave that to the lender. And that's where you as a loan originator can really work with these different real estate professionals to be that subject matter expert in your market. They're good referring business to loan officers, not as strong feeling comfortable about the mortgage process itself. And that's where they're going to rely on you to help them. And then at the bottom, you see some differences between real estate professionals that work with national organizations, regional companies, and or independent companies. When we took a look at the products and whether or not they saw them as positive products, loan products, we asked them about conforming loans, VA loans, federal housing, FHFA, federal housing agency loans, condos, etc. And the top three is what I'm going to focus on. You can see that conventional loan, 95% thought it was really positive, 91% for VA loans, and 90% for FHA loans. Again, positive views on these particular mortgage products. When we ask them, FHA loans, what do they see them as? Are they the lifeline, and for whom? Their responses, as you can see, FHA loan is seen as a more positive product for those with low credit, with no down payment or closing costs, thin credit profiles, derogatory credit, or high debt. That changed a little bit. If you can see, for the conventional loans, they felt that was maybe a good product for those with non-traditional credit as well as self-employed. Again, an opportunity for us to educate about the flexibilities of Freddie Mac's affordable lending products. When we ask the same questions or similar questions to our Freddie Mac contacts, so who is our Freddie Mac contacts? Those are individuals that are engaged with us through our Real Estate Professional Resource Center. Those that are engaged with us and subscribe to receive our insights, information, and are participating in our educational programs rated slightly higher based on those that are not engaged. They were a little bit more familiar about down payment programs. They had more knowledge about homeownership educational courses, and they had a significantly higher knowledge about working with state and housing finance agencies. So these were really good things to see, because work we're doing is paying off, but this is also a chart that shows us the opportunity to really increase the engagement with the real estate professionals. When we asked them to see, did they see themselves as trusted advisors, similar to the questions that you saw before, knowledge of local area, showing them the right properties, navigating the home buying process, you can see that they're pretty much in par with those that are not engaged with us, but we do have some higher numbers. Again, the more engaged a real estate professional is, the more knowledgeable, the more trusted advisor they see themselves as for their customers and their clients. We also wanted to take a look at the real estate professionals and their part in the home buying process. Some of the challenges that they may be facing with buyers throughout this process. So one of the questions we asked, how frequently are home buyers dropping out of the process early on or later in the home buying process? And you can see the top three reasons early on are rising interest rates, can't afford a home, or they can't get pre-qualified for a loan. If they're dropping off later in the process, primarily it's home inspection issues. issue if the terms of the loan or the mortgage application was denied. So this is really important because homeownership is a journey. Therefore, we need to help educate the buyers that it's not just about looking at the property and securing the contract. It's about making sure that they're financially healthy throughout the entire process. What was interesting and very reassuring is that 79% said that yes, frequently or occasionally, that buyer who dropped out will come back to that real estate professional. So this is good. This is positive news. That means that they're staying in touch, they're doing their job with that community, and the consumer is actually reaching back out to them when they're more ready to purchase a property. When we look at resources, we want to make sure that you continue to work with us and that you leverage the products and tools that we have to offer. One of the biggest challenges we heard early on was saving for a down payment. We also know that financial literacy is also a big part of being able to purchase a property. So when it comes to down payment assistance programs, we have leveraged our Credit Smart offering, but we also offer low down payment options for the buyers to be able to purchase a property with only 3% down. So what we're doing is promoting these educational opportunities to the real estate communities, to our loan originators, so that they are well-versed about the products and the flexibilities so that they can go ahead and offer these products to their consumers. What you can do, you can continue to go out into your community and educate. You can actually provide lender tools so that they can access on your website. Meet them where they are. Maybe provide digital tools, especially for those younger buyers who are very tech savvy, who are used to really doing their research online. So these are things that we can do together to reach out to the community. Now I have to talk to you a little bit about making sure, as a refresher for many of you, our 3 products that I'm going to cover today. We have many other products, but we want to focus on 3. Home Possible, which is for individuals that make 80% or less of the area median income. They do not have to be first-time home buyers, but they can purchase a 1 to 4 unit property. If they're purchasing a 1 unit property with as little as 3%, if they're purchasing a 2 to 4 with as little as 5%. The other thing that's great is that we do allow for a non-occupant co-borrower to be able to qualify for that loan, and they can drop the private mortgage insurance once they receive 80% of LTV. That's a great savings long-term for that particular buyer. They can buy condos and manufactured housing. Home One, for those individuals that may be above that 80% or less of the area median income. So that is really great when you have high cost markets and high income earners. They still can purchase with as little as 3% down. It is only for a single family. They have to be a first-time home buyer and they must occupy that property. It is only with a fixed term rate. Although Home Possible, they can also use it with fixed as well as an adjustable rate. Then you have the HFA Advantage, which is offered through the housing finance agencies and your lender. They can purchase up to 1 to 4 unit property, and they have a minimum MI requirement. I encourage you to reach out to your state or local HFA and find out about their offerings and how they work with Freddie Mac and Freddie Mac's HFA Advantage product. We also looked at the financial literacy. Millennials and younger adults are highly educated, but they tend to have a lower financial literacy capability in comparison to previous generations. So what is Freddie Mac doing? We have a slew of products under our Credit Smart suite that offer educational opportunities for consumers, all consumers, whether they're looking to purchase a property now or in the near future. What can we do? Make sure that as an industry, we're out there educating individuals about these products as well as these tools that they can access mobile friendly at their leisure so that they can start preparing and solidifying their homeownership journey. When we take a look at the Credit Smart suite, we can see that there's 2 sides of the house, as we like to call it. On the left-hand side is all that's financial capability. Those are Credit Smart Essentials, Coach, Military, and it is available in multiple languages. Essentials, robust program, self-paced, no cost for all consumers, regardless of where they are. It's not a home buyer education. It is truly a financial capability program. You can also become a coach through Credit Smart and use the Credit Smart suite to go educate your community. On the right-hand side, you have a home buyer U. For Freddie Mac's products, Home Possible, Home One, HFA Advantage, and others, if you're a first-time home buyer, you are required to take a home buyer education. We have made that available at no cost, mobile-friendly, to you, and it will satisfy that home buyer education requirement for those products. We encourage you to engage with us on a regular basis. As you can see, we have a real big focus on the real estate community. We have a focus on making sure we provide the B2B opportunities for you and the real estate community and housing counseling agencies, and we want to engage with you all year long. Please scan this QR code, sign up at no cost to stay engaged with Freddie Mac and participate in all the course offerings, all the insights and information that we have so that you can grow your business and we can make home possible for future home buyers, short-term, long-term, with your help. Thank you so much for participating in today's session. Please download and engage with us all year long. With that, I appreciate your time and thank you.
Thank you, Carmen, for your great insights and presentation today. To our audience members, if you submitted a question in our Q&A box, we will have a member of our Freddie Mac team reach out to you following the conference with a response. Your opinion is important to us. Please take a few moments to complete our brief survey so that we can continue to bring you timely and relevant content. This presentation deck will be sent to you following the session. You can also log in anytime after the conference to play back this or any other session. Thank you for your time and enjoy the rest of the conference.
Well, that's a wrap on day one of Freddie Mac Connect 2023. But don't go away just yet because our networking lounges are still open. And you can also visit our sponsors in the exhibit hall. I'm Sonu Mittal, Head of Single Family Acquisitions, and I want to thank you for your time and attention today. It was a whirlwind of great content that I hope equipped you with practical insights that will make a positive impact on your business. My favorite session today, of course, was my fireside chat with Ravi Shankar and Jeff Markowitz. Shankar and I are optimistic about the future of our industry. We will weather some ups and downs, as always, but Freddie Mac will be here to partner with you in our joint mission to keep the mortgage market thriving for the benefit of the borrowers we serve. I would like to thank our partners, sponsors for their support of Connect, as well as our breakout session leaders, and especially today's guest speaker, Andrew Bush. I was captivated by Andrew's insights on the extraordinary pace of change happening in our economy and the world. His observations were incredibly practical to help us prepare our business with the innovation that can drive opportunities in this ever-changing landscape. As a preview for tomorrow, we've got another packed day with valuable content that you won't want to miss. We have two featured speakers for you in the morning. First is Sam Cater, Freddie Mac's chief economist, who'll provide the most timely and relevant economic insights available anywhere. Sam is always a crowd favorite. We are also lucky to have guest speaker Majora Carter with us. Majora is an urban revitalization expert who will open our eyes about different ways to transform low-status communities into thriving mixed-use local economies. Coming up next is an opportunity to network with your industry peers in the seller and servicer lounges. Our sponsors will also be available in the exhibit hall to showcase their offerings. One reminder that if you miss any of the sessions you wanted to watch, recordings will be available after the end of the conference and will be on our platform for a year. Don't wait that long to watch, though. This is relevant, strong content that can help your business today. We are happy to have this virtual format that allows us to provide you the flexibility of watching every session you want on your own time. With that, I'll leave you to enjoy your networking, and we'll see you again tomorrow at 11 a.m. for more of Freddie Mac Connect. Thank you, and have a good afternoon.